Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Welcome to the deep dive. Ever wondered how people are actually managing to buy homes in this, well, kind of wild market right now?
It's definitely a question on a lot of minds.
Yeah, so today we're going to crack open some fresh data. We're looking at a recent SoFi-backed survey. They talked to 500 U.S. adults who are actively trying to buy a home.
And we're supplementing that, right, with data from FRED, that's the Federal Reserve Economic Data, and the National Association of Realtors, NAR.
Exactly. So our mission today, it's pretty clear. We want to show you the real hurdles buyers are facing, the surprising ways they're actually getting around them, and what all this optimism we're seeing really means. And this covers everyone. Whether you're a first-time buyer, and that was 55% of the people surveyed, or you bought before the other 45%, it's about real people, real strategies.
And it's a fascinating time for this because, you know, on the surface, things look almost impossible. Home prices have climbed so steeply since mid-2020. The median price hit, $419,200 at the end of 2024. Yet somehow, buyers are staying optimistic. They're finding these incredibly creative ways to save and navigate.
So that's what we're digging into, the how.
Exactly. How are they pulling this off?
Okay, let's unpack this then. If you're dreaming of owning a home, what are the biggest, roadblocks people are running into right now? Because it really does feel like costs and interest rates are just conspiring against you.
That feeling, it's absolutely spot on with what the data shows. The SoFi survey really highlighted two main challenges.
Okay.
For a big chunk, 42% of home seekers, just finding a home they can afford. That's their single greatest challenge.
Well, okay, 42%.
Yeah, and almost as many, 41%, said understanding all the different mortgage options was the most confusing part. It's a real maze.
So affordability and just figuring out the loan itself, what other money hurdles are popping up?
Well, the survey points to a few others. For about 1 in 7 buyers, that's 14%, just not having enough saved for the down payment is a major obstacle.
Right, the down payment hurdle.
Yeah, and then, you know, even before you get the loan, some foundational stuff can be tricky. About 11% are held back because their credit score isn't quite high enough. Another 11% are just plain struggling to get approved for a mortgage at all. And then 10% pointed to worries about job certainty, which, you know, makes sense for such a huge commitment.
It really sounds like a gauntlet of financial challenges. But let's talk about that down payment thing for a second. There's this common myth, right, that you absolutely need 20%. Is that really how it is?
Yeah, what's fascinating here is that myth just won't die.
Yeah.
But the reality, it's often more flexible. NAR data from late 2024 showed the median down payment was actually 15%.
15, okay. That's
For first-time buyers, it was typically even lower, think 8%. But here's the kicker. Almost half, 49% of those who said the down payment was a challenge hadn't even looked into down payment assistance programs.
Seriously, so they might be leaving money on the table.
Potentially, yeah. It shows a real awareness gap, you know?
Okay, so it's not just the money side that's tricky. The actual process of buying, that sounds like a whole other headache. What are the big pain points there?
Oh, definitely. Once you kind of get past the sticker shock, the hunt itself starts. Finding the right property. Top issue for 41%,
Okay.
but then it gets layered. Dealing with home inspection reports, that confused 32%.
I can see that. They can be dense.
Totally. And just the sheer amount of paperwork, that tripped up 31%. Negotiating with sellers, which is always, you know, a bit of a dance, another 31% found that confusing.
Wow.
Even finding a real estate agent was a struggle for 26%. So, yeah, lots of hurdles in the process itself.
It sounds pretty daunting, honestly. But here's where it gets really interesting, I think. Despite all this, buyers aren't just, throwing their hands up. They're getting creative.
Incredibly resourceful, yeah.
The data shows this overwhelming number. 92% of home buyers have actually changed their money habits specifically to save for a home. 92%.
It's a huge number. It really shows a massive shift in how people are approaching this.
It suggests they're not just hoping, right? They're actively re-engineering their finances.
Absolutely. And you have to wonder, I mean, are these changes sustainable long-term? Or is it a temporary, intense push?
Good question. What kind of strategies are we talking about?
Well, it's pretty diverse. Nearly half 49% are trimming non-essential spending, cutting back on extras.
The daily coffee, the streaming services.
Things like that. Almost as many, 45%, are actively putting more into savings. A really significant group, 41%, have picked up a side hustle for extra income.
Wow, hustling hard.
Yeah. And 26% have actually downsized where they currently live to save money. And then about a quarter are getting help from family or friends. So it's a real mix of tactics.
So everything from skipping coffee to getting a second job to moving.
Right.
These are real sacrifices. It paints a picture of, a generation really determined to own a home, maybe more than ever.
It certainly seems that way.
And how they're setting their budgets is interesting, too. Almost 30% are aiming for that $250,000 to, say, $500,000 range, even though the median is over $400K.
Right, so trying to find value where they can.
But what's really striking is over half the people budgeting $500,000 or more actually have household incomes under $100,000 a year.
Whoa.
Yeah, which suggests maybe they're counting on money from selling a previous home, or perhaps they're making all cash offers. It points to some complex financial situations.
Exactly. It's not just wishful thinking. It seems quite strategic. And how they figure out that budget number is also telling.
How are they doing that?
Well, the most common way, 48%, is just looking hard at their current budget. Makes sense.
Yeah, step one.
Then you've got 37% using online affordability calculators. 36% talk to a financial advisor. Another 36% review their credit scores carefully.
Smart.
33% look at their debt-to-income ratio. And 27% go ahead and get pre-approved by a lender to know for sure what they can borrow.
So a mix of self-assessment and external tools and advice. And what about those down payments they're planning for? We talked about the median reality, but what are people aiming for?
It really shows that 20% isn't the only game in town. You've got 7% looking at zero down options, 10% aiming for less than 5%.
Okay.
19% are targeting that 6% to 10% range. The biggest group, 30%, is planning for 11% to 20%.
So that's the most common target range.
Yeah. And then 23% are aiming higher, 21% or more, and 10% are still unsure. It's quite spread out. And worth remembering, like VA loans, no down payment required there.
Right. Important point.
But this brings up something critical. Saving for the down payment is just the first hurdle, right? Buyers seem very aware of the ongoing costs.
Thinking long term.
Well, maintenance and repairs worry almost half, 47%. Property taxes are a concern for 46%. Just making the mortgage payments, 45%.
Understandable.
Home insurance worries 39%, utilities 30%, and even HOA costs are on the radar for 25%. So they're definitely looking beyond just getting the keys.
That feels like a more sophisticated buyer, maybe,
Yeah.
looking at the total cost of ownership.
I think so. It suggests a level of realism alongside the optimism.
Okay, so it's not just about old school saving anymore. Tech is clearly playing a huge role. You mentioned online platforms like Zillow, Redfin, 65% are using those. What else? How is tech really changing the game here?
Oh, it's weaving through the whole process. Like 41% are using online lenders now. Think about how much that streamlines things compared to the old days.
Yeah, less paper, faster maybe?
Potentially. And this one's kind of mind-blowing. 39% have used virtual or augmented reality to view property.
Like VR tours.
Exactly. You can walk through a house from miles away. And 27% have used drone photography, getting that aerial view of the property, the neighborhood, things you couldn't easily see before.
That's wild. And it leads to this other really fascinating stat. 40% said they'd be willing to buy a home without ever seeing it in person if it checked all their boxes.
40%. It's a huge leap of faith.
What does that tell us? Is it urgency? Is it trust in the tech? Both.
I think it's a mix. In a market that moves super fast, waiting for an in-person visit might mean you lose the house.
Right. Speed is key.
But crucially, they're not just closing their eyes and hoping. These buyers are smart about mitigating the risk.
How so?
Well, 55% said they'd ask for a lot more info from the seller or agent. 49% would do deep online research on the place and the neighborhood.
Makes sense. Due diligence.
46% would hire a local professional, like an inspector, to check it out for them. 43% would use those VR or AR tools we mentioned. And 42% would get a real estate attorney involved to look over contracts and contingencies.
So, using tech, but also bringing in professionals to double check.
Exactly. They're using every tool available to cover their bases when buying remotely.
And despite all this amazing tech, it's clear that human expertise is still vital. You mentioned 36% using financial advisors, 42% real estate attorneys.
Yeah, it shows that for complex legal and financial stuff, people still want that professional guidance. It's a blend really high-tech tools combined with high-touch advice.
Okay, let's shift gears slightly. Let's talk about choosing a lender. Many see this as like the second biggest decision after finding the house itself.
Absolutely critical.
And it's interesting. NAR data shows roughly 1 in 4 buyers right now is paying all cash. It's an all-time high.
It is, which changes the dynamics for those buyers significantly. But for the majority who do need a mortgage, the factors they care about when picking a lender are pretty clear from the survey.
What tops the list?
Interest rates, no surprise there.
Right.
64% said that was the most important factor.
By far the biggest one.
Yep. Closing costs are also a big deal. 50% said they were key. 48% were definitely keeping an eye on them. Special programs or incentives mattered to 40%. And the lender's reputation, customer satisfaction, important for 39%.
So rates first, then costs, then maybe perks and reputation. Seems logical.
It's a practical assessment.
And what about the types of loans people are actually applying for? This is based on the 53% who went through a full application.
Right, so FHA loans were applied for by 28%. And it's really worth noting, FHA use among first-time buyers has dropped a lot. It was 55% back in 2009. Now it's down to 24% in 2024.
Wow, that's a big shift. Why do you think that is?
It could be several things. Maybe increased competition, making conventional loans more accessible, maybe changes in FHA requirements or perception. Hard to say definitively from this data alone.
Okay.
What else? Conventional loans were sought by 26%, pretty close behind FHA. USDA loans for rural areas by 23%, and VA loans for veterans and service members by 12%.
We talked about credit scores earlier. When a lender is looking at an application, what else are they really weighing beyond just that 3-digit number?
Yeah, that's where lenders often talk about the 4 C's. It's kind of like their internal checklist. Understanding these helps buyers know what lenders are looking for.
Okay, what are the 4 C's?
First is capacity. Basically, can you actually afford to repay the loan? They look at your income, your debts, how much room you have financially.
Right, your ability to pay.
Second is capital. That's the money you have for the down payment, closing costs.
Yeah.
Your own funds, your skin in the game, so to speak.
Got it.
Third is collateral. That's the house itself. What's its value? Because that's what secures the loan if things go wrong.
The ask.
And finally, credit. This includes your credit score, yes, but also your whole credit history. How reliable have you been with borrowing in the past?
Capacity, capital, collateral, credit. Okay.
And you can see how the challenges we discussed earlier, not enough savings, credit issues, directly tie into these C's.
That makes sense. It connects the dots.
So if we kind of zoom out and look at the big picture from all this data, the main takeaway, it really seems to be that despite everything high prices, tricky rates today's buyers are laser focused on the financials.
Finding something affordable, saving strategically, comparing those interest rates.
Exactly. Those are consistently top of mind.
And yet, maybe the most surprising or encouraging thing in all this is the optimism.
It really is striking.
Despite running this gauntlet we've just described, more than 4 out of 5 buyers, 81%, actually feel optimistic they'll complete the process and buy their home within the next 6 months.
Given the headwinds, that's a remarkable level of confidence.
It really is. So thinking about all this, what does it mean for you listening right now? As this market keeps changing, what other creative strategies might we see? And how else is tech going to reshape this whole home buying journey in ways we maybe haven't even thought of yet?
Lots to ponder there.
Definitely. Well, thank you for joining us on this deep dive today. Stay informed, keep asking questions, and stay curious.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.